And good morning, everyone. Welcome to another episode of the Market Snapshot series. My name is Rufus Kamau, Market Analyst at FX Pesa. So this morning, we are waking up to some big news happening in the markets. And mostly is stock markets crashing left, right, and center, with some of the most affected markets being the European, Chinese, as well as Japanese markets. So as we trade this morning, we'll be looking at trading opportunities, especially in the equity indices, mainly focusing on the big crash happening around. So this is all happening as a result of Trump's tariffs. So we know that Trump slapped China with 34% tariffs last week, and that was on top of the previous 20%, meaning that now China has over 54% tariffs. So on top of this, China had to retaliate, and what they did was implement a 34% tariff against the US, and as a result, we are seeing a lot of things cracking in the markets. So we'll be going through some of the highlights as we try to understand where the markets might be headed next. So can see a lot of people already joining. Good morning, Nachu. I can see Paul Kerry, Ken Moniki, thank you for joining. Good morning, Samuel Joroge Smith FX, Marcelina, I can see C-Stream, Dennis Mwangi, thank you guys for joining. So let's get things started. So this is an update from BBC, and they have been doing a good job in updating us on the minute-by-minute proceedings. So we'll be going through some of the key highlights this morning. So one, European stock markets plunge in early trading following stock market slumps across Asia. So shortly after opening, the DAX, which is the German stock market index, it was down almost 10%, while the FTSE 100, which is the London stock market exchange benchmark index, was also down by 6%. So the Shanghai Composite Index was down 8% at one point. The Hong Kong's Hang Seng almost 13%. So Monday losses follow global slumps last week, and earlier, US futures were sharply down, indicating that Wall Street shares will fall when the US market opens later in the day. So Donald Trump over the weekend decided to defend his policy. So he basically told reporters on Air Force One, sometimes you have to take medicine to fix something, meaning that he's going through with the current tariffs that he implemented against the entire planet. So in Asia, America's friends are suffering almost as much as China. Some fear a Liz Truss moment for Donald Trump. German markets recover slightly, but still down over 7%. In Europe, banks and defense firms see big falls. As Europe opens, Australian markets close at the lowest level since 2023. Huge falls on European markets. The key highlight, German shares down almost 10%, FTSE open slower. So everything is basically crashing, and if you're watching your charts, you'll notice that this has been the main thing. So as a trader, we know that even if things are really going down, you trade in the direction of the volatility. So today is in the direction of the bearish markets. So we are about to see more activity during the London Open, and of course, during the New York Session Open, we'll be looking at more volatility and potentially markets crashing down further. So as the saying goes, bulls climb up the stairs, bears jump off the window. So from what we are seeing in the markets, it's basically markets reacting to fear. So a lot of panic selling can be seen across different charts. So outside of that, if we look at some major highlights this morning, market rout deepens, global stocks and other risk assets continue to slide on Monday, while bond markets rallied as investors fled to safety amid growing fears that President Trump's escalating trade war could spark a global recession. The sell-off intensified after China retaliated against the US, while the Trump administration offered no signs of delay or compromise. So as you can see from major highlights here, even on the commodities side, these are not looking very good. With crude oil being under $60 for the first time since 2021. Brent is trading at $63 per barrel. down over 3% this morning. Natural gas is down 2%, gasoline 3%, heating oil 2.78%. Gold is also slightly lower, 0.37% down. Silver had an uptick after opening with a gap down. It made some good recovery, so it's in the positive. Copper is down 0.66%, soybean 0.44%, wheat slightly higher, but then coal, steel, gas and lumber all have been going down this morning. So among other highlights in the markets is that German export growth at 3-month high. UK house price growth holds steady in March. Gold extends its decline to around $8,000. China 10-year yield nears 2-month low. Brent slides as tariff turmoil spurs fuel demand fears. So on the other side, Bitcoin has really been going down. Now we are looking at a potential target of around 71,000. So more panic selling is happening across board. So with that in mind, we'll be looking at some of the key highlights and key developments, especially in this kind of scenario. So if you are very young and you just started trading, then you might not know this, but there are some currencies that are considered safe havens, especially when there's a market-wide panic. So far since this crisis is being engineered from the US, the dollar has been pretty weak, and a lot of traders and investors have been moving to other currencies. So as you can see in the today's performance, the Swiss franc happens to be one of the top gainers in the market, being up 1.3%, whereas the Japanese yen is also being taken as a safe haven asset, in this case being up 0.72%. So if you look at the last 1 week, it's still the same two currencies, the Swiss franc 1.3%, the Japanese yen 0.72%. And if you look at the last 1 month, the Swiss franc is still the clear winner, which basically indicates that out of sentiment is changing and out of investors are going the cash way. So in this case, we are looking at the Swiss franc being the majority gainer compared to other currencies, especially in this period when we are seeing a lot of turmoil in the markets. So on the stock market side, the biggest losers have been the tech sector. So since the year started, you can see some of the key highlight performances from some stocks, with Tesla taking the key highlight, being down 40% since the year started. You can see Apple is down 24%, Amazon 22%, Microsoft is down 14%, Nvidia is down 29%, Broadcom 36%, Google 22%, and Meta, the parent company to Facebook, is down 13%. So last year, stock market was majorly being driven by the Magnificent Seven. So gains in this smaller number of companies had made the SP 500 perform really well, as well as the Nasdaq. Now we are seeing the exact opposite, drops by these top companies, driving the indices much lower, and we could be seeing more reaction happening at the US stock market open later in the day. So as for the 1-day performance, this is the performance of the market as of last week on Friday. You can see it was a clear panic selling across board, with some key highlight stocks making some major losses. For instance, you can see Apple was down over 7%, same thing as Nvidia. Broadcom was down 5%, Tesla 10%, Facebook 5%, Google 3%, Microsoft 3.56%. So in this kind of scenario where we see market-wide panic and selling, you only expect more selling unless something changes fundamentally. So while from a trading perspective, this might just interest you in looking for opportunities to continue shorting, things are about to change. And whenever you see stock markets crashing, and a crash is basically defined as basically price moving over 20% lower than its recent high, which is basically happening across most stocks, then in that case, it's usually a premium opportunity to start considering buying assets at a cheap. So in this case, while everyone is panicking, if you're looking for an investment position, a position that you want to hold for a long time, then this might be the best opportunity to start shopping for quality stocks at very discounted prices. So while on one hand, we are looking at trading, there's also this other side of investing, where you might consider some of these stocks to be trading at a bargain, And of course, we know that the stock market always goes up. So after the initial drop and the panic selling we are seeing, we'll be seeing a lot of investors buying. So clearly, right now, the whole stock market is watching Warren Buffett, who is holding the biggest cash position ever. And in this case, once he starts buying, he will bring in confidence in the markets, and we will see things beginning to recover. So on the economic calendar side, we don't have much happening today. So as of this morning, we had average cash earnings coming in from Japan, which were up 3.1%, or basically wage growth was up 3.1% as expected. Job advertisements in Australia improved by 0.4% in the last month, which was better than the previous drop of negative 1.3%. Leading indicators for Japan were up 107.9%, but a slight slowdown from the previous reading of 108.3%. So German industrial production was a big scare this morning, where it dropped by 1.3% compared to the prior month, where there was a 2.0% gain. So in this case, we are looking at a weakening German industrial sector. And with this happening, then we have seen the panic selling across their stock market index. So we could be seeing further panic selling, especially happening on the DAX. So German trade balance also slightly improved to 17.7 billion, up from 16 billion in the previous reading, but still missed expectations of 18.4. So Halifax housing price index in the UK was also down by 0.5%. And now for the rest of the day, we'll be looking at a couple of announcements ranging from the Centix investor confidence, retail sales in the Eurozone, that's 11:30 and 12. Then later on at 5:30 p.m., we'll be looking at the Bank of Canada Business Outlook Survey, and then a speech from FOMC member Kugler. Then at 10 p.m., we'll be looking at consumer credit from the US. So all these are low impact news. So the key driving factor for the markets today will be the reactions to what we saw in early Asian session, where there was a lot of panic selling happening across board. So we'll be looking at markets reacting to that. And in case there is any form of update from Trump or Xi Jinping from China, then that could as well be a big mover in the markets. But for now, all we are seeing is panic selling, and a lot of emotions are involved in the markets today. So as we continue with the week, Tuesday's key highlight will be IVA PMI from Canada at 5 p.m. Then on Wednesday, we'll be getting a rate decision from the Reserve Bank of New Zealand, where in this case, we're expecting a 25 basis point cut from 3.75% to 3.5%. There will be a speech from Bank of Japan Governor Kazuo Ueda. This is in early trading hours on Wednesday. We'll be getting the crude oil inventories at 5:30 p.m. on Wednesday, and then we get the FOMC meeting minutes at 9 p.m. on Wednesday. So as we continue with the week, we'll be getting inflation data from China at 4:30 a.m. on Thursday. Then we look at a speech from the Reserve Bank of Australia Governor Bullock. This will be at 1 p.m. Then we get inflation data for the US economy. So in this case, we're expecting a slight drop in inflation from 2.8% in the prior reading down to 2.6% in this reading. So of course, if inflation is moving considerably towards the 2% target, then we might be looking at a Fed that could implement a rate cut in the near future. So that could be happening as soon as the May meeting, especially considering what's happening in the markets this week. So, of course, we'll get the GDP data from the UK on Friday, where we're expecting a 0.1% growth in the last 1 month. And then towards the end of the week, we look at the core producer price index for the US, as well as the preliminary University of Michigan consumer sentiment survey. So clearly, the economic calendar is not that busy. So a majority of the movement in the markets will be mainly focused on the trade war. So there's a couple of sites that are covering this live, and especially for bbc.com, I like that they are doing minute-by-minute updates. So this has been very helpful in showing key developments in what's happening in the markets today. So that being said, I believe now we can do some technical analysis. and try to understand where the markets might be headed next and what is the prevailing market structure. So as you can see, as of this morning, there has been quite a number of developments. So I'll be starting with the UK 100, which is the benchmark index for the London stock market. So since the market opened, there was an immediate reaction, and at open, there was an immediate drop of about 4%. The market attempted to make some recovery later, but then eventually dropped all the way down and was about 5.66% lower before making some recovery in the last 1 hour. So this is showing some further market-wide panic. So from the daily time frame, this is what we are looking at. So if you try to estimate the sell-off from the most recent high to the lowest price we have seen here, we can say that the FTSE 100 has been down 15%. So still quite a distance before we officially declare this as a stock market crash. Remember, we define this as 20% drop. So in this case, there's still more room, but now we'll be following closely to see if there is any form of negotiation between Trump and the UK. But so far, we expect to see more continued sell-off happening across board. So in this case, as we continue looking at this potential recovery, overall, we are expecting to see some further downside as the markets, as of this moment, are very emotional due to the panic being felt from the tariffs implemented by Trump. So we'll be following closely to see if the UK does a retaliation against the US. So if they happen to announce their own retaliatory tariffs, then that could cause even more panic and could be seeing the markets headed a bit lower. So on the Japan side, we have seen more panic selling. So from the most recent high to the current low we are seeing here, this is down about 28%, and to the current price level, it's down 26%, which basically says that the market is officially in crash territory. So there's a key level support here based on the last reaction in the market. So this was the lowest price we saw recently. So I'm trying to make my line thicker here. So this was the key level support, and as you can see, as of this moment, or as of this morning, the market bounced exactly at the same area, and now we are seeing some nice bounce happening, but then the panic is still not yet over. So we could be seeing more reactions later in the day, especially during the New York open. So if there's more market-wide panic selling, then we could be seeing the market retesting the same level. So on the US side, we have also seen the Nasdaq make a big sell-off at open. So clearly, after the market opened, it dropped 5.6% immediately. And now we are seeing the market attempting some form of recovery. But still, we are in a very strong bear market. So I wouldn't say that this is the right time to be looking for a buy. But then more short selling opportunities could appear during the New York session. So as of this morning, compared to the most recent high in the Nasdaq, it's now down about 26%, though it has made some recovery. It's still down 24%. So clearly, it's officially in a market crash territory. So the last time this happened was back in 2020. So we all remember the stock market crash that happened in 2020. So if you compare that with what happened in 2020, stocks were down about 32%. And then eventually we had a very strong recovery that went years higher. And now we are seeing a similar kind of situation shaping up. And if this continues, then we'll be looking at potentially some very nice recovery from all the indices. But we are not yet there because the tariffs issue has not been resolved yet. And a lot of investors are still panic selling. So we could be seeing more panic selling, especially during the New York Open. So kindly be on the lookout for the market reaction at the New York Open. So for the Dow Jones, it's the same thing, a big sell-off. And from the most recent high, if you estimate, we are basically down about 19% with some recovery. We are still down 17%. So with this kind of big sell-off, as we always say, don't try to catch a falling knife. So if the market is strongly panic selling, then the entire idea is to look for these pumps and then go for more short selling positions. So SP 500 also doing the same thing. And now if you look at the European equity indices, the EU 50 had a big panic selling as of this morning. So immediately the market opened, it just kept going down. So from the close of last week to the low of today, it was down 6.59%. Right now we are looking at some form of recovery, but overall there's a lot of panic selling going on. So there's a key level support here. This was the lowest price that we saw here in the month of August last year. So still more room for downside momentum. So good chance we'll be seeing the EU 50 retest this price action level. So as for the German stock market index, so this morning we had an immediate reaction where the market dropped by 3.93%, which was later extended to 7.33%. So now we are seeing some form of recovery, but overall it's still a very strong sell-off in the market. If you compare with what was happening a few days ago, around mid-March, compared to what we are looking at, the stock market is down around 19%. With some recovery, it's down 17%. So very close to crash territory. So look at the Spanish stock market index, and then you compare what happened this morning. So right from the open to the lowest price, we were down 8.94%. The market has made some form of recovery, but overall, this is a clear-cut panic selling in the market. So in such a scenario, as I mentioned, we don't catch the falling knife. We mainly look at more short selling opportunities. So if you look at the 15 minutes chart, you can see the attempts at recovery already being rejected, and good chance that we'll be testing the lows in the day or even later in the week. So for the French stock market index, it opened with a gap and kept going down. So comparing this to the closing price on Friday last week, we note that the market was down 6.56%, made some recovery, but still it's showing signs of panic selling, and we could be seeing more drops happening later in the day. So Chinese markets were not spared either. So if you look at the Chinese yuan, the dollar is really recovering against the yuan, given that now we are looking at tariffs from both sides. So after the big rally that happened after the initial announcement of tariffs, the Chinese yuan recovered immediately. But then after the recovery, we saw towards the end of Friday the Chinese yuan losing again, and now the dollar is looking to retest the previous high. So we might be moving higher with the Chinese yuan. So the Hong Kong stock market index basically opened with a big panic selling. So right from the open, it was down about 10%, and then later extended the fall to around 14.75%. So it's making some recovery, but there's still a lot of panic in this market. So big sell-off has happened, and if you compare this with the most recent high, we can say that the stock market was down 22%, well clear into crash territory. So for the China A50 cash index, also there was a lot of panic selling as of this morning. So compared to the closing price on Friday, the market went down by 6.84%. Has made some recovery, but it's around 5.93% below Friday's close. So clearly, a lot of panic selling is going on. So clearly for this market, you can see we had a key level support around this area here. And now with the new break, the China A50 index could potentially move down lower from the current price action level. So potentially a target of 11,359 as we continue seeing markets adjusting to the news of Trump's tariffs. So on the currency side, we already mentioned that we are looking at the JPY as a potential safe haven currency. So since all this business of tariffs started, all we have been seeing is the dollar losing to the Japanese yen. So at some point, we had a breakout towards the upper side. The market faced resistance, And then the entirety of last week was just the yen gaining against the US dollar. So as of this week, we noticed that the market opened with a gap. So this is a huge gap, if you ask me, between the closing price on Friday and the opening price today. So the market went all the way up, crossed the gap, moved down, and now is making some form of recovery. But the idea is to be looking for short selling positions, especially if the market retests the 146.583 price action level. So the Australian dollar has been pretty weak, losing more and more to the dollar. So clearly, a lot of panic selling last week. So if you look at the daily time frame, these are levels we haven't seen in a long time. The last time the market was trading at these levels was all the way back in 2020 during the COVID crash. So now we are seeing it happening in a similar manner. So clearly, it's a very strong bearish market. So we opened with a gap. The market crossed the gap. Now we are about to see the market drop again. So most likely we could be seeing the market retesting the early morning lows. So good chance that we see a quick drop from here. So I'm talking about the market basically dropping back to around 0.59308. So pound USD and Euro USD are both falling or losing to the dollar. So after attempting some form of recovery in the early morning session, now we are seeing price moving further back downwards. So now we have a trend line between Thursday, Friday highs and today's highs. And now we are more likely to see the market moving further downwards, with key levels being the swings that we saw this morning. So for Euro USD, there was this session low here, and we could be seeing the market retesting this area here. This is 1.09229. So for pound USD, also the same kind of thing is happening. So an attempt to close the gap, which was successful. Market attempted to push even higher, but now we are seeing a reversal. So the day's low becomes our new target. So good chance that we see the pound moving back to 1.28 to 1.5 price action level. So the Swiss franc, as we mentioned, is turning out to be a very strong currency. So from the daily time frame, you can see the panic selling of the dollar against the Swiss franc, meaning that the currency is serving its purpose as a safe haven asset. So in this case, more bearish momentum is expected. Even though the market is a bit more volatile, notice that it opened with a gap, attempted to cross the gap, which was not successful, and then made a huge drop. And now we are looking at a market that is a bit more volatile, but the key idea is to be looking for short selling positions as the Swiss franc takes precedence compared to the US dollar. So New Zealand USD also having big losses against the dollar. So from the daily time frame, this is how it looks like. So we are looking at key level support. Trying to clean my chart here. So key level support around this area here. So the market has really attempted to break this area here several times in the last couple of days. So on the weekly chart, 4-hour chart, this is what we are looking at. So a very sharp drop, which was immediately rejected. So perhaps we could be seeing some form of retest playing out later in the day. So from the 15 minutes chart, this is how it looks like. So still not yet volatile, but more of a consolidating markets that I would say is just moving sideways since market open. So in this case, we'll be looking for a potential break outside this consolidation with more buyers on the bearish side. So on the other hand, we have seen silver. Silver had opened with a gap lower, but then immediately crossed the gap and rallied. So we have seen the price of gold hit new all-time highs in recent days, but somehow silver was not doing particularly well, and there was a big drop from around 34.579 all the way down to below 30. So the lowest price we have seen was this month around 28.26. So having seen this new low in silver, we are seeing the market make an important recovery. And this being a safe haven asset too, we expect to see some more upside momentum, especially after the big drop that happened last week. So this week, we'll be looking at potential bullish positions on silver. And lastly, we look at Brent oil, which has been pretty weak since last week. So clearly, you can see the panic selling that happened in the last 2 days, with the price of Brent oil dropping by about 16%, with some recovery. Now we are looking at 15.93%, and this is within a span of 2 days. So from the daily time frame, this is how it looks like, and we are looking at prices that we were last seen in 2021. So the last time we saw Brent oil trading at these levels was back in April 2021. So oil is mainly dropping because of a couple of factors. One of them is that OPEC decided to expand its oil output and export in the markets. The other one is that Trump's tariffs are really impacting a lot of businesses, which is expected to hit a lot of economies. So with a slowed down growth, it comes slowed down demand for oil. And as a result, that's why we are seeing this panic selling happening in Brent oil. So far, it's a big drop down to 63, and a good chance that we could be seeing this being continued. But before that happens, notice that we have a big gap that wasn't crossed this morning. So at some point, we could be seeing the market moving higher and closing the weekend gap. So that's it for the day. Checking the comment section to see if there's any questions. So what if China reply to USA in a negative way? How will it affect gold? So in this case, China has already implemented reciprocal tariffs against the US. And with that announcement, that's why we are seeing a market-wide panic selling. So gold had already priced in the movement of these tariffs, and that's why gold was already hitting new all-time highs. So the most important thing to have in a stock market crash is cash. So a lot of investors are moving away from risk assets and holding cash as they look for opportunities to buy assets at a bargain. So in this case, while gold was holding its value and making new highs as investors were uncertain, now the uncertainty is reducing, and a lot of investors are going the cash direction. So as a result, I don't expect gold to be reacting much to the upside. So it's more like a lot of investors will be selling some of their gold to source some liquidity to buy assets at a cheap. So in this case, I don't expect gold to be making big moves the way it was making a few weeks ago. And you can look at the range over the last 2 days. It has been pretty amazing. A lot of volatility in gold, but the upside is now a bit more limited. So where is there a gap in USD JPY pair? So it's a weekend gap, like the closing price as of last week on Friday is not the same as the opening price today on Monday. So this usually happens across the weekend, the difference between the closing price on Friday and the opening price on Monday. And of course, we know that while the markets are closed from the broker side, banks are still transacting. So that's why we meet new prices at the market open. So in this Trump era, which is safe, swing day or scalping. So in environments where there is extreme volatility, positions that could have taken you a few days to make a profit, now they take only a few minutes or even a few hours. So, and of course, with volatility, you can't just hold onto a position and go do some other stuff waiting for the market to get to your targets. Markets are very volatile, so shorter term trades are much better compared to longer term trades. So JPY and CHF are the currencies that are gaining most. So does it mean both are considered as a safe haven pairs? Yes, the JPY and the Swiss franc are being considered as safe haven pairs as of now. So I believe that was the last question. Thank you very much, everyone. And remember that these snapshots happen every day from Monday to Friday at 11 a.m. So make sure to share this with a friend so that they can also benefit from the live analysis session. So remember, this session is not investment advice. It's not a recommendation to trade, so you should always do your own due diligence. So that's it for the day. Hope you have a profitable day and a profitable week.